presenter is Marina Villatoro. It's nice to have Marina here. She's joining us. She is the founder of The Trader Chick and is internationally known for her very straightforward and uncomplicated strategies and techniques for trading the futures markets. Her focus is on reading and understanding the language of the market and has mastered the art of simplified day trading. Certainly, I know I could benefit from since I've decided to make it the most complicated thing to do in the world. Anyway, in today's presentation, she's going to be sharing her 4 steps to simplifying your day trading: spotting and avoiding consolidation in transitional areas, reversals, divergence, and changes in market direction, and how to quickly scan for breakouts and prime trade setups. So with that, let's welcome Marina to the room. Hi, Marina. How are you doing?
So much for having me. I am very excited to be here today and a beautiful June day. I don't know how it is with you guys, but I know that the weather is starting to look up for most places.
And Marina, where are you? Where are you joining us from?
I live in Guatemala. I'm joining you guys from Guatemala.
Right.
Yeah. How about you guys? Where are you?
Well, Robinson, Texas, and Austin. Nikki and I are a little north of Houston.
No, it's very rainy here. We're not having great weather, so we're jealous.
Well, actually, rain on humid days could be a good thing, right? We're getting rains as well already, so we kind of like the rain.
Well, we're going to turn this over to you, and we'll be here if you need any help. Thank you for coming today.
Sounds good. Okay, thanks. I'm just gonna organize myself here. Hang on a second. Okay, so oops, hang on. I'm trying to open up the chat. So everybody, I love having questions asked at all times, so please go for it. I am here actually to answer all of your questions and anything you want or need. So today's my presentation will be all about 4 steps to simplifying your day trading and dominate the market under any condition. And again, my goal is to totally answer everything for you. And I see there's already a question here from John. What broker am I using in Guatemala? Well, I'm a US citizen, so I'm using everything US. Basically, it doesn't matter where you guys trade. It depends on your citizenship, right? So I use a US broker, so I could trade wherever. All right, so let's continue. And hi, everybody. I am Marina, the Trader Chick. And today I will be talking to you about simplifying the markets. But first, I want to tell you about a confession that I want to make. And I am a scalper. I don't know if you guys know what scalping is. I personally did not know I became a scalper as I was becoming pretty successful and consistent until I started to share my strategy with people, and they're like, oh, you're a scalper. And I'm like, what is a scalper? So basically, how did I stumble upon scalping? And of course, usually when you come up with something really great in your life, a new direction, I don't know, anything that's kind of remarkable usually happens from a very strong loss or a lesson, an error, whatever. Unless you just quit and say, you know what, this is a failure, you don't really learn much unless you turn that into something that you can learn from. And I actually always teach my kids that failures and mistakes are golden nuggets, right? Because that's when we learn the most. It's kind of as rudimentary as when you or your child takes a test and let's say they do really poorly on the test. What do you think they're going to end up learning the most? The ones that they made the errors on, right? I actually think teachers should start switching that around and really focus on the ones that they make the errors from, because those are the ones they're going to remember way more than the ones that they did well on. And it's pretty much the same thing in life, right? If everything's hunky-dory, we don't really learn too much, right? So basically, that's kind of what happened with me. My scalping strategy happened from a massive loss. And basically what happened was, this was over 6 years ago at this point, I ended up losing almost $4,000, $3,842 to be specific, in 5 minutes because I was chasing a trade. I saw it go in the wrong direction, even though I did have a mental stop in place, which we all know what those are, your ego ends up winning. And I would not permit myself to admit that it was going in the wrong way. And next thing I knew, my entire account was literally blown. And that was one of the ways that I ended up really understanding what's going on. However, it was not the only way, because after that moment, if you think that I stopped, no. What happened was I ended up revenge trading for another 2 days and adding an extra loss of almost $2,000. So literally in 3 days, I almost lost $6,000. And I remember laying on my floor in my bedroom, that's where my office is, flat face, completely defeated. My husband comes in the room and he sees me and he's standing over me and he's like, what are you doing? Why are you losing our money? And why are you doing this to yourself? But I don't know if a lot of you have gone through this, but basically what I ended up having was a breakdown. And it wasn't only because of the financial loss, which sucked. It was the mental and it was the defeat. At this point, I was trying so hard for like 2 years becoming a day trader. And it was this, I could not permit myself to accept that I was a loser, you know, like, and that was really, so I ended up having a complete and total breakdown. And what happened was when you have breakdowns, usually two things could happen, right? You have to make two decisions usually. One is you quit, you give up on whatever it is that you were doing, or you get a total breakthrough, right? And I don't know if any of you guys ever watch Nacho Libre. It's one of our very favorite movies. I recommend everyone just goes and watches it just because it's so funny and so odd. But there's this one point where I completely relate to Nacho. So Nacho wants to be a luchador. For in Mexico is the lucha libre, is these wrestlers, and he's dying to become a wrestler, and he's horrible at it. And there's this one part in the movie when he stands in church praying to God and saying, why did you give me such a passion to be a warrior and made me so stinky at it? And at this point, that's exactly how I felt. I'm like, I have this desire to become a trader, and I feel I am just losing. And I totally related to Nacho. But what happened was that I ended up having a total breakthrough. Also kind of like Nacho. But what happened was I took time off from the charts, because revenge trading, if any of you have done it, I'm sure you all understand, it is a completely emotional way of trading, and it will never work, right? Because you can't be rational when you are just desperate. So I ended up getting away from the charts for 2-3 months almost, but I just would never permit myself to admit that I couldn't do it, because I knew deep down inside that I knew I could do it. I totally knew I could do it. And one of the things that I started to recognize that I was not feeling right about was I never learned to read the markets. I never learned to understand the markets. I, at this point, have spent over almost $20,000 on my education with mentors, conferences, seminars, weeks away retreats. I mean, you name it. It was ridiculous, right? But one thing that I recognized is that nobody actually taught to read the market. Like every time I ask, hey, can somebody please tell me what is a reversal? Because I hear them saying reversals, divergences, and it's, you know, people were treating it like I was born with this information. But if you think about it, those are the key elements. That is the language of the markets, right? So when I came back to the markets, what I did was I literally stripped my charts. First of all, I had 3 monitors going on. I removed 2, and I had like 10 different indicators going on. And I removed all of them. I was just staring at the bare naked charts, right? And that's when I really started to understand what was going on slowly with the charts. And I literally started to study them for years, understanding what is going on, and then recognizing the basic language. The language, right? It's kind of like when you sit down in a car. I know you guys don't think of it as a language, but think of it. You get in the car, and it's at this point pretty automatic. We know where the gear stick is. We know where the clutch is. We know where the brakes, the accelerator, the front, the back, drive, reversal. That is the car's language, pretty much, right? And at this point, you could get in and you could just do it. But when you began at first, you couldn't do it. So I found that the majority of the stuff that I was doing was I was just pressing on buttons that I was being told and following strategies, but not understanding why. And that's how my trading was, right? So I ended up just studying for years and totally seeing that the market has a language. It is fluid, and helps us become automatic when we trade. And if we don't understand that, the reality is, guys, you'll never be able to trade properly. If you don't know what a support, resistance areas, divergence, reversal patterns, these are the basics, and it can be used across any market that you are trading, right? But if people are just going into market, throwing their money in, and just, oh, because there was a long bar, or there's no understanding of why, you'll eventually fail, right? So as I was learning all of this and developing a strategy and really understanding when the market was shifting momentum and going into the flat sideways zones, I started to look for these setups, and they were working. So another problem that I had before was that it's one thing, it looks really pretty on paper to have big targets. Oh, it looks just gorgeous, right? Yeah, sure, I made $400, $600. However, when you're going for those huge targets, two things happen. One, you have to put up a pretty big risk. There's no possible way you could do, that without a big risk. And the other thing is you have to sit through it for a long time. And a lot of times when you're going for such big targets, it will start to back and forth, move around. It will give you so much stress. So I was really struggling with that. I could not sit through those long targets. I was losing way too much money because of my risk area. And then I recognized if I was going for smaller targets, they were getting hit much faster. And it wasn't about the money. And a real trader will come and tell you right now, it's never about the money. It's about you making the right decisions. It's about you having a strategy. It's about the trust. Because once you have that foundation, the money will flow, right? Because if you're constantly going in for the wrong trades, you don't know what you're doing, you're just going to end up losing. So what happened was I was taking all these trades and they were for much smaller targets, and they were getting, that little cha-ching. And what was happening? My emotional capital was rising and rising. I was believing in myself. I was believing that I could do this. And when I started to share my winnings and my strategy, people were like, oh, you're scalping. So basically what scalping is going for really small, much smaller profits and a much shorter time frame. To be honest with you, with the market the way it's been in the past 3.5 months, I used to be between 3 to 15 minutes. Now we're talking like 30 seconds to a minute and a half. Sometimes the majority of the trades that are happening, right? So basically you're just getting more targets, and you don't have to sit through that stress of a long wait neither. And that has been the massive, beautiful benefit of scalping for me. I absolutely love scalping. I think it's awesome. So quick official intro time of who I am. I am Marina, the trader chick. I am an expat living in Guatemala. And another really weird fact, which I didn't even remember, today is literally 11 days that 11 years, not days, years that we are living in Guatemala. And the reason why I totally remember is because it's the day that Michael Jackson died. I know, totally random fact, but today is our anniversary, 11-year anniversary living in Antigua, Guatemala. I am trilingual. And the reason why I bring this up is because if any of you have learned a language in later years, you'll understand that concept. And that's when I realized that the markets, they actually speak to us in a language. So I am originally from the Soviet Union. I am a refugee from the Soviet Union. We moved to the United States when I was 6 years old. So over 42 years, actually. I just turned 48. So I speak Russian fluently. It's my mother tongue, but I grew up in the States, so English is my main tongue. And before moving to Guatemala, we lived in Costa Rica. So I've been an expat in Central America, Latin America for almost 20 years. So I speak Spanish fluently just the same. And that, excuse me, and that being trilingual really helped me understand that the market actually has a very specific language that speaks to us. And that's what makes it so much easier to understand once you get it. And that's why I can understand that the car has its own language. If you speak to doctors, they have their own language. Everybody has their own language. And once you learn it, you're able to be fluent in it and be able to communicate. And in this case, for us, it would be the charts. Before I became a day trader, I was a fitness instructor. I trained in a lot of gyms in Manhattan. I lived in New York before moving to Costa Rica. And I was a travel writer. And actually, you can still find my travel site. This was up way before I became a trader. Travel Experta, which talks all about our travels. We do travel a lot. It's a huge part of our lives. And with COVID, we're kind of housebound. Actually, today, right now, I was supposed to be in the Ukraine for the first time visiting since we moved 42 years ago. I bought a gift for my mother. But, here I am in Guatemala. We couldn't do it. Hopefully, COVID will be under control soon enough that life could go back to normal for all of us. All right, so quick of what I trade. I trade the ES minis, which is on the futures market. Basically, the E-mini is literally just following the S&P 500 index on the futures market. It works a lot different than like the SPY. The future market works differently. It works in points. It does not work in shares. So the reason why I went with the E-minis is because if you're trading the stock market, you do have to have $25,000 in your broker's account. When you start with the E-minis, you could literally have $500. And I recommend $1,000, $1,500 just to give you guys some like leeway. So you can start a lot less money, right? You don't need that kind of money. Another thing is that usually when you're trading stocks, you have to have watch lists, you have to you have to do research on all these different stocks. With the E-minis, it's 100% technicals, which is just awesome. There is no research necessary. The average stock trader, like I've said before, has 3 to 5 blinking indicators and charts. And even I did that when I first began with monitors, but I managed to put it all on one chart. I literally trade now 1 chart, 2 indicators, and I love it. It's so much fun. It's not stressful, with all these blinking lights. And again, being a stock trader and even Forex and options, I find that you have to spend a lot of time researching and analyzing. And the whole goal for me for trading was for me to only do it at 1 or 2 hours per day. And with the E-minis, and when you are a scalper, you literally cannot do longer than an hour and a half. And that isn't because it's such a romantic notion or not. It's literally because your brain is a very high activity performance. You could only do so much, right? So your mind can only do so much. It's kind of like thinking, think of Michael Jordan. Do you really think he could put 100% of himself and go for more than 2-3 hours? And he's like the optimal athlete, right? Even he has a time when he's like, my God, I can't. The mind works the same way. So that's one thing that I really love is that after an hour and a half, I'm pretty spent. And usually I am really focused and getting everything done. And I'm sometimes done after half an hour as well, depending on the amount of trades that are happening in my session. Okay, so I want to talk about the basics of day trading so that all of you guys could apply all of these just the same. Before we go anywhere, I am giving this whole presentation, everything that I'm about to show you for free. And you could go to makingofaDaytrader.com. Probably I tried the link that you guys did and I wanted to put it in, but it wasn't working. So I'm sorry. I know that it was set up, but I've been trying it. It doesn't go anywhere. So this is where you guys could get the entire presentation for free. MakingofaDaytrader.com. Okay, guys. So like I said, everything I'm going to show you now is for free, and it's actually what I use daily in my own trading. All right, but before I continue, I see that there are quite a few questions here. Dinakar, does your method also work for regular stocks? Yes, because it's all about understanding what the market is doing. It doesn't matter what market you are going to be trading, you will be able to understand. I personally use the ES Mini, but you could totally use it. So John, small profits, yes, small stops. I am 1-to-1. Scalpers are usually 1-to-1. But if your trading setup is 90% positive, it's great, right? It's all about the probabilities. So yes, again, 1-to-1, awesome. Your broker, do you deal with that will let you trade? So I have been trading with NinjaTrader for over 8 years now. When I began, NinjaTrader did not have affiliate brokers, so I am with AMP. But AMP I'm grandfathered with AMP Futures. They are not with them anymore. However, NinjaTrader does have brokers that they work with, and it's $500. However, because of the volatility lately, they've raised the margins just a little bit, but they will go back. Like when March, the whole thing happened with the COVID, they raised the margins. So I think it was like 1,500. Then they went back to 500. I think now they're back up a little bit because, since the market crashed 2 days ago and all this weirdness, the volatility has been insane. but they're going to go back once everything starts to calm down once again. But normally you could start with $500 for one contract. Okay, I think I am not only doing futures. I'm going to be talking about all of the market. All right, hang on a second. I see there's what's happening here. Oh, there we go. There we go. There we go. Okay. All right. So let's jump in, guys. So like I mentioned before, my charts. This is it. This is my entire chart. I work with futures again. I use these two indicators. My indicators are EMA lines and the MACDs. So I have 3 EMA lines, which are the exponential moving averages, and the MACDs. MACDs for me is my holy grail. I find them to be the least lagging indicator, because when you understand reversals and divergences, you'll start to understand when the weakness is starting to become in the market. And it's all about weaknesses and strengths. However you want to talk about the market, it's all about where is the most amount of strength, so you could get in the beginning so that it gives you that amount of time to really benefit going up or down. Day traders, doesn't matter if you're going long or if you're going short. And the MACDs I find to be the most indicative of when the market is starting to lose that strength. So I always want to be on the right side of the market. All right, market movement and the breakdown of a trend. So logistically, practically, pragmatically, however you want to say it, that part of our brain, when we understand things but don't use the emotional aspect of it, we know that there are three trends. We have the uptrend, we have the downtrend, and we have the sideways trend. However, with the uptrend and the downtrend, it's pretty easy to understand. Yeah, the market's going up, the market's going down. However, when it comes to the sideways trend, even though we get the idea that it is a flat, dead market, indecisionary, exhaustion pattern, consolidation, whatever you want to call it, this is when our emotional mind takes over. And I'm going to show you why, because the reality is trading is very emotional. Guys, we can pretend it's not, but we are not robots. We are humans, and it's emotional. So when we have emotions going on, what happens is we create stories in our heads, and those stories, they rule us, right? So it depends on the story that we're looking at. So I want to talk about today a lot about the sideways trend, because I literally call it the trader's worst enemy, because the majority of the money that we end up winning with the good trending market up or down, we end up losing in the sideways trend. So just so you guys get a much better idea, obviously this is another example of downtrend, consolidation area, which is the sideways trend, upward trend, right? Upward trend, pretty basic. Each pivot is going higher than the next pivot, right? I mean, it's pretty easy to grasp. We call it the bull market, market trending up, going long, however you guys want to call it, going for a buy when we're looking to enter on a smaller price, getting higher. Downtrend. Each pivot is lower than the other one, right? Pretty understandable. We're shorting the markets. It's a bear market, right? So let's talk about consolidation and the transition areas. And I call these the trader's worst enemy. And once we understand how to spot them, we can totally understand how to avoid them. And that is the most important thing. So what is a consolidation area? I want to think of yourselves. Okay, this is what a trend is in layman's terms to break it down. Imagine you are ready to go for a jog, right? You get your shoes, your running shoes on, you get your running clothes on, you get out the door. Do you think you're going to have a lot of energy when you first get out that door? Absolutely. If I was to bet on you guys to run, that is when I want to say, you know what, I'm going to put my money on him right now, because he's going to run for a mile, right? However, after a mile, do I still want to continue betting on you? Not so much, because what happens when you're jogging? All right, you might get a little tired. You might have to tie your shoe. You want to get a glass of water. You start to be like, do I really want to continue? I'm kind of tired. You know what? Oh, I have to write this report. All of a sudden, you slow down. So in this point in time, you yourself are not really fully sure what's going to happen next. But then you're like, you know what? I'm going for it. You pop in an energy gel and you're headed out. That's a breakout. So that's when the trend is strong once again. So the consolidation area is that moment of doubt. Now, what happens in the market when we have a consolidation area, especially when we have a strong trending market? Two things. This is when your mind becomes stories and emotions. And I know for me, this was my deadliest areas because that's where I ended up losing the majority of my money. Why? I am a contrarian trader by nature, meaning whenever the market is going in one direction, I'm always looking for that correction. So for me, what was happening is when I was in a strong trending market and it became a consolidation, my mind took over and they're like, you know what? The market has been going up all day. I'm headed down, man. It's got to retrace. It's got to correct. And then I was going in for shorts. And I know a lot of trend traders, you know, when the trend is your friend, their mentality is the market's going up all day. You know what? It's going to continue. I'm going for a long. Here's the reality, guys. The market doesn't have to do any of those things. We, as individual traders, can never, ever predict what the market is going to do, and we can never beat the market. What we can do is read the market. Now, there are three insanely important positions in the market. One, knowing when to get in. Two, knowing when to get out. And three, and the most underused position, is knowing when to sit out. If you guys don't know when to sit out, you'll be crashing, right? It's kind of like getting in your car and you're seeing a red light and you're stopping at that red light, which is a consolidation area, and you decide, you know what, I'm going to go for it. Because, you know, there's no cops around, there's no cars, boom, and all of a sudden a car comes out of nowhere and crashes into you. Whose fault is that? Yours, right? Because it's a red light. And a consolidation area, that's that red light. We need to understand it and we need to sit out because we have no idea what the market is going to do. So there's so many ways of consolidation areas. They could be small, they could be large, they could totally change direction. So how do we know when this is even happening, right? So the way we understand and the way we could really start to understand it is through areas. Look, the market respects areas. It totally respects them. It revisits areas, sometimes daily, sometimes within a couple of days, depending on your time frame. So you have to understand and respect it. And those areas are support and resistance areas. What are support and resistance areas? They're the ceiling and the floor of a market. It could be either of a trend, it could be either of a channel. So we have a support and resistance area. We have to understand where that market revisits over and over again. And you can see those black lines, those are day breaks. So right here, there's 3 days, and those areas have been revisited in 3 days. What is a resistance? It's literally the ceiling of the market, literally. It's where the market has hit, excuse me, over and over and over again. And we as traders have to respect that. And we cannot be like, well, it's going up, it's going to continue. How do you know? You have no idea. And this is when the money gets lost. So this is a resistance area. This is what it looks like. Since I am a scalper, for me, an hour and a half is a long time. So here, this is about 2 hours long. This is a resistance area that was really respected on that day. There are many trends that I could totally take advantage of, but then it goes into a channel as well, right? And when it's a really narrow, choppy channel, I don't want to be anywhere part of it. Support area, the floor of the market. Right? This is where you're headed down or in a channel and it's the bottom part, right? And again, you have to respect it. You have to understand when it is happening. Usually these areas happen with 3 hits or more, right? So it's especially when a resistance support area hits and they change direction, those are pretty significant areas, right? Even if they changed and it came back, there's still significant areas that the market has been respecting. And we, as individual traders, what do? We need to fully respect the market, right? Here is a very choppy, ugly channel. You really don't want to be in something like this. There is absolutely no direction. There is no understanding what is going on here. So putting your money in and just going for the sake of taking trades, which the majority of beginner traders do, is become trigger happy, and they believe that they have to be constantly in the market one way or another, when being out of the market is as important as being in. But do you really want to go into a market that has absolutely no direction? Not really. It's kind of scary. And look at this one. It's just ugly, right? So not only do we now understand what to look for and the support and resistance areas, but we could also learn the very beginnings of this. And I call this trader's map shift to direction and trend, because it's all about being on the right side of the trend. That's it. It's knowing when it's going to move. Whatever your time frame is, it doesn't matter, because if you have it, if you're looking at those areas, understanding and when that strength is, you could be on the right side of the market. So the most important, and this is literally for me, my telltale signs, this is like my golden tickets, are reversal patterns doubled with divergences. This to me is so loud. It is that X, not only is it a red light, but on top of the red light, it's like that train crossing with those big flashing red lights. So it's like a double red light for me not to enter the market. So reversal patterns, they're pretty basic. We have the double top, the triple top, double bottom, triple bottom, basically when the pivots are hitting each other. What is the divergence? So divergence works with price action. As you can notice here, I have that big green line and it is inclining upwards. My MACDs, on the other hand, are starting to incline downward, right? So that means that there's weakness in the market. So what all I know is an indication, a potential for it to change. When that's going to happen, I don't know, but I can, in the meantime, sit and wait until I have that confirmation. And I am an incredibly conservative trader, so I do not care if the market continues in that direction for a while, because I need to be in a trade that is going to be 85 or higher % probability in my favor. And when I see divergences and reversal patterns, that is not going to happen. So again, double bottom, massive divergence, and it's all about back testing. You have to know, like I back tested divergences, reversal patterns to see how often they continue in that same direction. And I found that they are less than 20% working in the same direction. So that means 80% of the time they change direction. When that happens, I don't know. That's not for me to decide. All I know is when the market is telling me that it just did that, okay? So let's put this all together. Again, you can get all of this information, the entire cheat sheet, makingofadaytrader.com, and it's completely free. Please go there. I'm going to now answer some of your questions if I see them here. Okay, hang on. There we go. Okay, what are the settings on my MACDs? Tony, I will be opening up my charts so you guys could see them in live. So I will show all of that to you because I see everybody here is asking about the MACDs. And Basil Luxcom, I think that's your name. I work with a 610 tick chart. So that is my time frame. And again, I will show you guys all of that once I open up the charts. Okay, so I want to talk about breaking out of areas because again, if you do not know when there's a support or resistance area, you can lose out on a super high probability setup, which is the breakout. And we all know those breakouts and they're awesome, but if you don't have your support resistance drawn in or even know that it's there, how can you take advantage of it? So back to layman terms, because I love to simplify things. What is a breakout? Very simply put, here you go. Imagine you guys are getting into your car and you're going to go and visit your friend that lives north of you. All right, you know the road, everything's great. You are in your car on the highway, super confident, but all of a sudden there's a big sign and it says construction and you have to take a detour. I don't know about you guys, but let me tell you about my detour feelings. Every time I'm in a detour, I am in complete doubt and a little bit of concern. Why? Number one is, what if they forget to continue with the detour signs? I don't know where I am. What if I get lost? I've never been in this neighborhood before. Two, what if they don't ever open up the road? What if I get lost? Oh my God, I don't know what I'm gonna do. What if there's a hole in the ground and I have to turn around? So what happens when I'm in that detour? I have complete doubt. I do not have the confidence to say that I'm gonna get to my friend's house, right? Now, all of a sudden, construction ends and the construction worker says, all right, you guys are home free. And all of a sudden you're back on the highway that you are fully familiar with and you're back on the road. What do you have there? That's that breakout. It's that strength. It's that power of zooming to your friend's house once again. Those are the breakouts, right? So that's why it's important to know when they are happening. And again, we know when we're in the detour, when we're sitting in a resistance or a support area. Obviously, with the resistance area, if you're going north, support area, same exact understanding, only south, right? So consolidation areas, when the market slows down and all of a sudden it says, hey, it's open, everything's fixed. So what is a breakout trade? For me, It's when I obviously know when it's happening with my resistance areas or support areas, and then all of a sudden the MACDs open up, massive strength in the MACDs, no divergences, and I get in. So my EMA lines is where I enter. I never just go into a long bar, ever. It has to go and then retrace. Think of yourselves as archers. Imagine an archer walking around on a field, you know, the archery guys or women with, you know, bows and arrows, let's say a competition, they would never just start shooting their arrows, which I can't even tell you the amount of traders that do that. They have a very specific place where they stand, and they also have a very specific place where they hit their first target, because that's the other issue. A lot of people do not have targets in place. Oh my God, it's going up, I'm going to continue. That's when greed takes over. You got to, it's all about your environment, controlling it. Have your first target in place, get that money out, put your risk at a break even, and then have fun with wherever the market can maybe go. But at least you've already put that money in the bank. Okay, so that's what my EMA lines are. When it breaks out, no divergence, and it quickly does a mini retrace into my EMA line, that's why I'm sitting with my order waiting. You never, never, never want to go in market. That's not a trader. That's an amateur, because you end up losing money on the spreads or slippage. All right, my other trade that I absolutely love is my initial instant reaction trade. Again, consolidation area, transition area. How do I know it's going to change? I don't. But when it does, when my MACDs give me that massive strength, there's no divergence, boom, I'm sitting and I'm waiting for my entry. Oops. Okay, so now I want to share with you my chart screen. How do I do that? New share. There we go, right? You guys could see my charts, right? Okay, so while we're looking at my chart, I'm going to answer some questions. Hang on a second here. All right. Yes, John, that they are, but that is not my only setup, right? There is a lot that I do to make sure that that setup is in the correct lineage, right? Because I also have for my 52 EMA line, majority of them actually happen through that, but there's so much more to it, right? It's not only that particular setup, right? The setups, again, Henry, you have to back test and see if that strategy will work, right? Because it's all about back testing, guys. You cannot say, oh wait, I think that trade looks good, and all of a sudden do it in the live market. That is literally just donating your money to the markets, right? So I'm gonna quickly go over, I know that some of you asked about my time frame. So here is a 610 tick chart, right? This is, first of all, every single one of my indicators can be found in any good charting software. It is not only NinjaTrader, it is for any charting software. Okay, so the 610 tick chart. I don't know if any of you guys use the 610 tick charts. They're really cool because, like I said, I want to eliminate the stress. I like to simplify my trading. And before I became successful, I had over 10 indicators flashing, going on and off. It was so stressful for me, right? And one of those indicators was the volume indicator, because it's important to know what's going on in the market volume-wise, right? However, the volume is a lagging indicator. It is not real time. Tick charts, as you can notice right here, you can see on my right hand side where it says ticks remaining, each bar has 610 transactions in real time. It is literally giving me the countdown of how many transactions is happening. So with trading, what is the most important thing? It's the volatility, it's the movement, it's how many people are in the transactions, right? What else is there? There's nothing else. Otherwise, it's just murky, dead waters, right? We want to see that mobility. Now, if you're sitting in a 1 minute or a 5 minute chart and using the volume indicator, you do not have that real time of knowing exactly what is going on, right? So for me, I discovered that I was completely able to eliminate the volume indicator by using my tick chart, and I absolutely love it. So you can see when it slows down, right now it's totally slow, but a second ago there was a lot more transactions going on, right? So I like to see the movement going on. It's really important for me. And that's exactly why I have my tick charts. I love the tick chart. All right, so I'm gonna show you guys my indicators and my setup so you guys could check it out. And I may just do another share with you. All right, so you could see here, these are my indicators. So my MACDs, really standard. We're talking super standard. Fast, slow, smooth, right? And normally MACDs have three different plots going on. I eliminated the average and the difference. I only use the actual MACD because I don't like the noise. I cannot be bothered with that white noise. I just want to show you guys something. Oops. What happened here? I just stopped sharing. Sorry about that. All right, I want to go over. So what I want to show you guys a little bit is kind of what I was just teaching you. All right, so here's the market. Here is a resistance area. Here is a support area, right? So check this out. After this run down, it broke through right here, right? This is when I am now spotting that there is a breakout. Now, I want to show you something here. Reversal patterns, right? I have a pretty significant double bottom, right? And massive divergence happening. And look what happened. So my red EMA line is where I look at the shifts in momentum. It is my main line. So everything below it is obviously going down. Everything above it is going up. And with my MACDs, the way I do it right here, this dash line, that is the zero line. That is the dead zone. Whenever anything's around the zero line, that means there's zero strength in the market. So I personally put in these brown bars because to me, after a lot of back testing, I recognize that if the MACDs are hit in that area, especially after the first moves, that's when the majority of strength is. And this is when I could pretty much go into a lot of my trades without really doubting myself because I know at this point they really work. Right? So when there's high and below, that's when I know that there is strength in the markets, right? And that's how I pretty much read the majority of the market. All right, let me see. I know that there was some more questions. I always start with one-to-one. Always one-to-one. I am, at this point, I have lost too much money to be going for bigger risks. It's not worth it for me. I am an incredibly conservative trader. Greed has won the best of me at one point. It doesn't anymore. So yes, one-to-one. What I do though is I have a split target. So once I get my first target, I immediately move my risk to zero, and I now could move along with the target. So that's a different story. Yes. Tony, why do I use the 610? So when I first began trading, there was many different things that I was learning, and the 610 was the one that I ended up really connecting with. And now after 8 years of working with it, it really is I've mastered it. I just love it. I understand it. I know how it does it. It's kind of, like a pianist. Every pianist has their own way of doing it. They have their own piano, right? Some people love Steinbach. Some people love Yamahas. It's pretty much what makes it's that instrument, how it makes it flow for me. So that's the reason why I personally enjoy the 610, right? However, when I began, these two other EMA lines, they came from the other two tick charts that I was working with. My purple one was from the 233, which is obviously almost a third of the time frame, and the orange one is my 1597 tick chart, which is 2.5 times more, right? And then I realized that I could put them all on one chart and they work the same as if though I had 3 charts going on. And that's how I pretty much ended up with the one chart. Okay, guys, let me know if you have any other questions in this about my charts. And so obviously we only have a few minutes that I can't show you completely my method, obviously, right? But you can get a really good idea of how I read the markets, and you could totally apply that to all of them. My target is always 1 point. So I know that a lot of you don't trade the E-mini, so I just want to go really quickly in explaining how the futures market, especially for the ES minis, works. As you can see here, this is the price. We never, people who trade the E-minis, we don't ever talk about price. We do not care about the price. All we talk about is points. So 1 point is literally one more price thing, right? And I have each box is 1 point. 1 point in the futures market per one contract is worth $50. You have within that 1 point 4 ticks. Each tick is $12.50. You can never earn less than $12.50. You can never lose less than $12.50. I always go, my target is always 1 point. My risk is always 1 point. That's it. It's standard at this point. This is all I look for. So that's how it's broken down in, yeah. And you enter limit orders only. Guys, do not go in market. If you're going in market, you're an amateur trader. That is for long term. Because what happens if you're going in market, look, this is how I do. Right here, this is my order waiting. You see here? Now, I could play with it. When I see something setting up that I want, this is my order waiting. I could go through here until I let go. I am not filled. Okay, why? Because if I go in market at an area, I immediately lose $12.50 automatically. But why? I should know what I'm looking for, right? It's not a sporadic thing. Oh my God, I think that might be a good trade. No, that is not a good trader. You need to know what you're looking for. You need to know what you are setting yourself up for. Okay, does that make sense, guys? Let me see here. There are tick charts for every single market in the world. This is a very, very common, you can see it's the time frame. So it's not anything special, Mark. You could use it on any market and any, yes, so absolutely. All right, guys, let me know if you have any other, excuse me, any other questions, and I'll go back to showing my presentation.
Yeah, hey, Marina, it's Raleigh. I have a quick question for you. I know that your focus is on the E-mini S&P with the 610. If people want to trade other markets, do you also recommend 610, or does that vary by market?
So I recommend tick charts because I find them to be the most real-time volume that you guys will ever have. What I do recommend is for instance, the E-mini is a super beautiful flowing market, right? So it's quick. However, there are like the MES, the micro ES minis, those are really slow, right? There's a lot less people in there. So I recommend the 233 tick chart for that. Obviously, I am more of a futures person, but this, all you have to do is apply the tick charts to your market, because you'll also know, right? For instance, there's like the low float stocks. They're obviously super slow, but then you have Apple and Amazon that are moving like crazy. So you want to go a little bit higher with your ticks because you want to see more transactions per bar.
I got you. I was thinking, for example, if you were to trade crude, you know, and I didn't know if there was some kind of a formula that you use that might suggest what the tick setting should be for an alternate futures market.
No, personally, no. And crude, it's too erratic. I'm not a crude fan. It's also much higher in money. Yep. But yeah, whoever is really watching that market, again, back test, don't be live trying out these new ideas, but try the tick charts. So I found the tick charts to be a godsend to me, like literally, because I could eliminate that volume because I'm kind of guessing with the volume indicator. Michael, how many trades per day do I take? Usually between 1 to 3 trades, and my load is usually around 10 contracts. I do have some trades that I look at as to be a little bit more aggressive than others, so maybe I'll go into 3 contracts for those, right? You have to understand what you are trading and really understand your market, right? Can I show you a trade? Sure, Tony. Let me just, I think I still have some time. Right, Raleigh, I still have 10 minutes. I'll be able to show, right? Okay, so let me go back to my chart here. All right, so hang on a second here. Okay, so let me show you a trade that I was in this morning. Okay, right here. So because I am a very small trade, small time frame, I only trade for about like 1 hour or so. So here's a good example, right? We have this mini Oh, wait, hang on. No, this is not the one. Sorry, that's not the one. Where was? Okay, yeah, here we go. Okay, so we have this, it's right here. There we go. I remember now. First of all, we have this double top already. We have this divergence happening here, right? We have pretty much a shift. If I was to continue going here, because I'm only looking at one point, right? I would have been totally stopped out, right? So then it continues to be divergent. Even though it's moving here, it's pretty flat here, right? And it's pretty flat continuation. This to me is showing me there is going to be a massive slowdown. This is one of my absolute favorite trades ever. And I find this to be like, I call this the magic zone trade. So right here, I have my magic zone. This is my main EMA line, which once it crosses over and crosses the MACDs, I know that I have shifted direction. Because I am a contrarian trader, I really love to get in on those really quick moves when the market does trade. However, does shift. However, you cannot do for a long term because it is pretty much going up. Right here, I call this my magic zone trade. Once it hang on a second. Once it crosses through here, does that mini retrace. Like I said, guys, this is my archery point, and look at what it did here. Totally went through here, barely retraced. It didn't even retrace on my MACDs. Once I'm in, and I'm already waiting for it right there, waiting for that trade, right, with my order waiting, boom, it got me out. I don't even know, what is that, like less than a minute. Boom, I got my 1 point. This is when I go in with my 10 contracts, sometimes even more. I just love these, love these. Okay, so this is one of my best trades that I do, and I do them quite often. They happen quite a lot, especially with the moves lately on and off, so they're happening a lot more. As you can see, I move my charts a lot. We're talking in less than an hour. Because of the volatility lately, there's a lot more bars that are happening, right? So this is pretty much something, again, you can't ask a doctor to tell you their entire knee surgery strategy in 3 minutes, but you can get an idea. Hang on a second here. Okay. I have some questions. Do I trade after hours? I personally do not. However, the E-mini, that's the beauty of it. It is almost a 24-hour market. So it is open for 6 days a week for 24 hours, and it's slow, right? And you have to know that. So it's a different mind frame. It's a different group of people. It's usually from Asia, from Australia that are trading. So it's a little bit slower, but absolutely you can. I personally don't. I like the quick moves. Oh my God, I love the super quick moves. I cannot handle slow. It really, really stresses me out. So hopefully in that respect, you could, yeah, it depends on you. So the 2052 and the 135 SKU, they're literally taken from my 233 tick chart, for my 610 tick chart, and my 1597 tick chart, and just I did a proportion of those EMAs because I was using the 52 EMAs on those. Okay. All right, John. I don't know crude, so maybe that's great. I honestly, the crude is not my thing. I find it to be very risky. All right, guys, let me go back into the rest of my presentation because I think I only have a few minutes left. And if there's more questions, please ask. Oh, actually, this is the end. So again, you can get all of this from makingofadaytrader.com. And guys, if you have any more questions, please let me know, and Raleigh as well. And thank you again so much for having me here. Let me see. I'm not understanding what you mean. My stop loss is 1 point, and when do you move? Oh, when do I move my stop loss? When I have a split target. So if I'm going into a trade when I do a split target and I hit my first target, I automatically bring my stop loss to break even. At this point, if it goes back, I haven't lost anything except for the commission on it. And that's how I normally do it.
So to the, Marina, to that point, it sounds to me, as an example, there might be a situation where you have a 1 point as your first target and 2 points as your second target. You hit the first point, you take some of your position off, you move your stop to break even, and then you hope that it moves to your second point.
Exactly. Yes. So I go by points. I usually only have one extra target in place. I don't go for more. I don't. Greed used to win the best of me at this point. Honestly, guys, if you're going in with 10 contracts, $100, that's $1,000. What really? What do you guys? What else do you want? It's a pretty good day.
Well, that's super. Hey, Marina, listen, thank you so much for your time today. That was a fast hour right there. You covered a lot of
Yeah.
information, and once again, just really appreciate, your dedication and your focus. You have one market, you have one strategy. It works for you. It works great for you, and you shared your techniques with us. The simplicity of your charts, really do appreciate that. And once again, thank you for your time. And did you say it was the 11th anniversary of your move?
Yes,
I think
today.
today. Okay. Well, happy anniversary.
Thank you. And thank you so much for having me. This was super fun, and I really appreciate all you guys coming here. It was really great, and all the interaction and your questions. I really appreciate it. And if you have any questions, you could just, write me at thetraderchick.com.
All right.
And thank you. Bye. Thank
Well,
you.
that sounds great. Thank you so much. And let me see here. Let me grab the screen here. And I want to put this up here. Boom, boom, boom. Okay, once again, I want to thank Marina for coming here today, and her special offer is that simplified day trading cheat sheet. There's a couple of links where you can get that. I did check this out, Marina, westmarktrading.com//MV. It does work. It does connect to your site, as well as what you shared with us, makingofadaytrader.com. So either way, and also it's a great time for me to remind everybody, all these presentations are being recorded. You will get an email from us this weekend with a link to all of these recordings, including the special offer links and the contact information for the presenters. So if you don't have the information today, or you missed a presentation, or you want to go over something, no worries, you're going to have it all.